Good morning. Welcome to Taxes Made Easy here at smartmoneyculture.tv. We are excited for another week. We're going to wrap up what we were talking about last week as far as closing out a small business and dealing with these issues facing you. So there's so many issues that affect small businesses, and it's very important to do it right. There's a lot of news as well to cover today. A lot of updates from the weekend, and but again, want to spend most of our time talking about how to close out a small business. We're going to do a summary and then finalize, wrap it up today. So, going to have some great information for you, and stick around, and we'll be right back after this next break. And closing out a business doesn't mean you're done. It just means in its current form, it makes financial sense to move on and do something better for yourself. So stay with us. Welcome back, everybody. Got some interesting news for the day. Just want to kind of go over a couple important pieces here. First of all, and I think this is important to just general world news, Israel is getting ready to invade Rafah. Now, that's probably the oldest news out there, but it looks like they're actually making serious moves to do so. They have dropped leaflets. They've announced to the people, look here, to the civilians, come move to this other area, Mislaya, I forget the name of it. But again, they've done this before. Before launching operations, they give them full notice. They inform the people, hey, this is where you can go to be safe. The problem is not everybody wants to go. A lot of people want to stay. And then Hamas, when they were fleeing before, there were Hamas snipers taking out people trying to flee at first. So again, there's some really nasty stories going on. It's Mubasi is where they're supposed to flee to. And there's a lot of humanitarian aid. They've left it there, but this allows Israel cover to go in and take out Rafah. Now, part of this, just to be fair to the Israelis, and this is mentioned in the article, everybody's clamoring for a ceasefire and for Israel to stop attacking, except for Hamas. Hamas has rejected every single ceasefire, and they're still firing rockets. They're still attacking Israel from their last remaining stronghold. And granted, Israel is actively invading Gaza. But they want a ceasefire, or they want international pressure for a ceasefire, but they're still claiming they're going to continue attacking. They're going to continue their actions that started the war. And they just killed 4 Israeli soldiers with a rocket attack. So both sides are continuing to fighting. I mean, if they truly wanted a ceasefire and they're sincere about it, they would change their tune. They would. You can't have peace with someone that's swearing your destruction and willing to act on it. So again, we're going to see a lot of new things in the news. The Biden administration decided not to send the latest arms shipment to Israel, so that should make some people happy here with all the protests going on. Next article, I'm actually going to share this one. This is political news more than anything else, but it directly deals with the budget. And I think, so this is, again, Speaker Mike Johnson, the Republican House Speaker, is facing another vote for his ouster. And he's probably going to stay in office. This vote is largely symbolic, but it's been forced on him by Marjorie Taylor Greene. Now the question is, why would she do this to her own speaker? And it all goes down to the budget. And there's other reasons for it too. FISA warrants were just allowed to continue even though they were abused. There's no question that they were abused and used for political witch hunts. And so again, there's no doubt. The news is out there, the reports are out there that they were abused. But whether or not we should continue those is a different story. But again, the more conservative Republicans are furious that the last budget bill, the FISA extensions were passed mainly with Democrat support. So personally, I feel it's great to know what your local representatives are actually doing and supporting. The reason for it is a lot of people go and they vote and they just vote R or D, and you don't know where they truly stand on a budget. You don't know if they're just going to continue playing the same old game that everybody supported. And again, it's Republicans and Democrats. It's not one-sided here as to where the problem is. Both parties share blame for continuing to just spend. So again, Paul is expected to win because the Democrat leaders said they would support him, so they vote to shelve this motion. But what it does do, and that's the thing, she doesn't have the votes. Marjorie Taylor Greene doesn't have the votes, but it's to force people, Republicans and Democrats, to go on the record as to, okay, who's supporting continued spending. So I think, and she's getting pilloried, she's being targeted in the media. And do I support everything she's done? No. But I do think that knowing what your representatives are doing, having some clarity when it comes to voting for House and the Senate is important. And I don't care if you vote Democrat or Republican. You should know what they're supporting, what their votes, what the impact of their votes are on the country. And too often, Congress is really good about hiding that information. And so, and as far as voting for people that are budget conscious, and there are times Democrats have had some really good proposals, especially sometimes on the progressive wing, where they have common ground and they understand this is a huge looming disaster and they're not doing anything about it. And so I do see some bipartisan cooperation sometimes, but it's usually the middle that they're just, they love to spend, they love to go to the trough and hand out pork like crazy. And who loses? The consumers. So next article, this one is an interesting article. This one is from the LA Times. And I'm going to go ahead and share this one as well. So California Supreme Court is to rule on a high-stakes battle over a ballot measure restricting tax increases. So this is the Howard Jarvis Tax Association. So I forget the full name. But they've come and they've gotten together with businesses and they said, we're done with the taxes. The legislature passes taxes all the time. And the businesses feel that they don't have good representation because it's mainly Democrats. And so, the businesses feel like they're constantly being attacked. The wealthy feel like they're under constant attack. So they have this proposal that putting out there saying, if you want to pass new taxes, you can do it, but you have to pass it by 2/3 in the legislature, which is a much higher threshold. And there needs to be it needs to be put to the vote by the people. So that makes it a lot more difficult to raise taxes, and they're very broad on this because in the past, when the legislature has been very creative about not passing taxes but raising fees, hitting people in other ways. So the idea behind this sounds good. And California is known for blowing money like crazy. The high-speed rail is a huge example. They've spent over $20 billion fighting homelessness with nothing to show for it. And in fact, homelessness has gotten worse, much worse, because they're not attacking the real causes here. The real causes is that housing is insanely unaffordable in California, and costs go up, and their solution is always tax the rich. So Why is the Supreme Court involved? Because Gavin Newsom and the Democrats moved to quash the measure. They want to stop it before it even becomes voted on. They don't want people to vote on this because right now it looks really popular. Um, but this is a part of the problem of why California is so mismanaged. So it goes all the way back to the progressive era, 1910s, 20s, where again they had all the backroom deals, the smoke-filled rooms where the legislature was so corrupt they would find the paper money, going around stacks of money. The garbages in the state capitol would be filled with those because someone brought in a ton of cash and just paid off the legislatures to get whatever they want. And so the people had a little revolt, and this is where they passed the recall, so the governor could be recalled. They passed for the initiative, and so people can actually, for certain things, anybody can put a measure on the ballot by getting enough signatures for an initiative. So they passed a lot of direct democracy ideas to control and try to limit the power and the corruption and the governor's office. And at the time, I think the legislature was controlled by Republicans. For many years, California, early years, it was controlled by Republicans, and then through the later years, modern era, 60s, 70s, 80s, it kind of went back and forth between Republicans and New Democrats. And then the last 20 years or so, maybe a little bit more, it's swung solidly to the Democrats, and that's where it's been. The problem with that is when you're legislating by initiative, and I actually sympathize with Governor Newsom. He has some good arguments here. It makes it almost impossible to run a state, for better or worse. It makes it so much harder. And then, again, if people still keep voting for the same people time and time again, if they don't like where California is heading, they should vote differently. They always talk about half of people are wanting to leave California, mainly due to the high cost of living, but they still vote the same way. They still have the same people in control, doing the same things. So again, you have labor unions really don't like this, and they're fighting this as well as the legislature. So it's going to be, they have to rule on this by, I think it was June 29th. And when they make that decision, part of it, it's going to strike this down or allow it to stay in place. And one of the concerns here is if this passes, it's going to strike down a lot of existing taxes because it's retroactive for the last couple of years. So we're going to wrap up with this when we with the next article when we come back, and then dive into our main topic. Welcome back, everybody. Thank you for watching live or on rebroadcast. So we've been talking about some of the larger news and issues, taxation issues. And these fights aren't just happening in California. There's a similar fight going on in Massachusetts where they're copying Los Angeles and trying to pass the millionaire's taxes on mansions, which again just drives people out of the state, raises revenue in the short term, long term. It usually just drives people out of the state, and which then the state loses money. So, it's there's no easy fixes, but again, trying to just do things the easy way usually hurts people. So I want to focus on a couple articles here dealing with retirements, and this is where we see so many people get in trouble, which is why I want to hit on this. So first one is a CNCRC NBC article, and I'm not going to dive into it too much, but but this is talking about a 401k match could have unintended consequences at tax time. So basically, if you have a Roth 401k, gets a little funky here. So normally with a 401k, the tax dollars go in pre-tax into your 401k with the idea that when you retire, you're only going to pull out a little bit at a time out of your 401k, and all of those funds are you're going to be retired. You're going to have a little fewer expenses because hopefully your home will be paid off. So the hope is that when you're drawing off of your 401k, your overall income will be much lower, so you won't have to worry about it. Now, Roth is not pre-tax, it's post-tax. And why would someone want to do this post-tax? Because if you pay now, then all of the increases that you get over time won't be taxed. So you're saying, okay, I'll take the tax hit now, and then I'll be able to benefit more from all the increase off the money that's already been taxed. And when I go to withdraw my funds, I won't have to pay any taxes. So there's advantages to both. Depends what your situation as to what is ideal for you. But what you need to watch for is your employer's Roth match. So a lot of employers will do matching. So here in this case, a lot of employers are considering it, but this is really the best way to clearly explain it. So if your salary is $100,000 with a 6% employer match, it means you're taking $6,000 of your own money and investing it. And then your employer is also matching that at $6,000. So if you're close to the federal, and it has the charts down here, if you're close to the bracket, in this example, at $100,000, this is where he is, but he's right close to the line, and so he's probably in this bracket with the standard deduction. The standard deduction would put him right around $85,000, but that's only $10,000 away. If you add $6,000 to that, depending on what else he goes on, it could very well take him from a 12% tax rate to a 22% tax rate. And the thing is, you don't see this contribution on your W-2. It's not something that you see clearly, and they typically don't withhold taxes on this extra $6,000. So not only will you owe taxes on this $6,000 if you haven't had it withheld throughout the year, but it can put you in a higher tax bracket because it doesn't show on your normal return. It gets reported on a Form 1099-R instead of just putting on the W-2. Confusing, and this all comes from a change in 2022. Main takeaway here, if you are invested into a Roth IRA, make sure that you understand the consequences of it. Be prepared or pay in a little bit extra in taxes to cover the match, because it's still counted as income when your employer matches it. So they give you a match, but you have to pay taxes on the match. It's not tax-free unless you're putting into a 401k, and then you get taxed on the back end on it. So gets a little confusing here, and they're warning that people are going to get surprised by it. People do get surprised by these forums and these situations all the time. So my suggestion is sit down, make sure you're talking to a good CPA. If you're in the situation where you're investing regularly, good for you, kudos, you're planning for the future, but talk about the different investments you have and prepare so you don't get surprised. You don't get bumped in a higher tax bracket without being aware of it. Again, that's the biggest jump from 12% to 22%, and then it just slowly increases from there. Second article is very closely related to this, and this is an IRS articles from their newsroom that popped up, and this has to do with disaster relief and retirement plans. When can I take money out of my 401k, out of my Roth IRA? So these federally approved plans that have benefits, tax benefits. And this is one of the biggest things I see that hurts people is when they take out money out of their 401k and they do not plan properly for it. So the whole idea between 401ks and Roth IRAs is that you're socking money away and you're not going to touch it till you're in retirement, and then you'll maybe take out whatever supplementary income that you need to live comfortably and decently in retirement. So if you're getting Social Security, maybe you're getting 24,000 Social Security, and maybe pull out another 15, 20,000 out of your retirement per year until that is designed to support you. So that 20,000, that's maybe 45,000 total in income. That's not going to get taxed that high. But if you have an emergency and you pull out a huge chunk, 100,000, 200,000, then you're getting taxed at, if you're retired, the 24,000 for Social Security plus the 100,000, 2,000. Let's say you pull out 200,000, that puts you in a much higher tax bracket. Sorry, if you go to 200,000, you're going to be taxed between 22 and 24% of that's going to go away in taxes. And what happens is that most people don't understand that. They take the money out, they use it for whatever they're going to do with it, and then the tax bill comes and they don't have any more money. And that's a huge problem facing taxpayers. I see this happen all the time. So how do you prepare for this? First of all, have savings, have other assets, emergency accounts where you're not pulling out this huge chunk of money that's designed for your retirement. Be a little selfish here. I'm a Christian. I donate to charity. I was at a charity event last Friday. I donate regularly to the poor and needy and for other, to my church. But you need to be a little selfish and not hurt yourself, not blow up your own finances. You can't really help others if you don't have your own financial house in order, because then you just cause yourself and your family more pain. So it kind of goes in the background here. And what this act is about is if you follow certain rules, and be careful that you're following these rules, because this is put out, people are thinking, oh, if there's a disaster, I can just pull out a huge chunk from my 401k and I'll be fine. Well, not unless you follow the specific rules for this. And I'm not going to dive into the rules here, but you need to, if you're considering doing this, please go talk to a CPA. Go talk to someone that understands this and that can walk you through this and make sure you qualify to either take a loan out or take a chunk out if needed. And sometimes you need to access these funds, but make sure you're doing it in a way that's not going to kill you and kill your taxation, really hurt you bad. So even if you're close to the new year, if you take out some in December and then you take the other half in January, you can spread that damage out between the 2 years. But if you can qualify for these special disaster rules, you can pull money out of your 401k without getting hammered. So this goes into a lot of Q&A, explains who qualifies, what is a disaster relief. It has to qualify, be appointed a disaster by FEMA. They have the list of disasters, and we talk about those. They're always posted on irs.gov as well. It had to have an economic loss. I mean, it gets into the nitty-gritty here. I just want to bring this to your attention and say, look, if you are having a situation, you do think you're having a disaster, talk to someone first, because this can really blow up your case. I see so many people, I wish I knew, but then there's some people's like, look, I would do it for my family anyway, even though now I have this huge tax bill that I have to deal with that's going to cause a lot of problems, and it's pretty expensive. So worst case scenario, if you know you're going to get hit by a tax bill, all you have to do is take out more and make sure the taxes get covered. But ideally, people are not emptying out their retirement accounts. They're not, part of this is being disciplined in other ways, not just having your other 401k, but have emergency savings, have other things that aren't through a 401k or IRA where you can, if something happens, you can help out in different ways rather than empty out your retirement funds and hurting your family in the future. So, moving to the topic for the day, closing out your business. This is all about, and it should be all about you. It's about doing the right thing for you and your family moving forward. So when someone comes to me and they say, look, I have these tax bills, I have all these problems going on, one of my first questions is your business profitable? And if they haven't been filing returns, they usually have no idea. Am I making money? I don't know. Are you losing money? How bad is it? They don't know. So most people don't do a profit and loss. They don't do it quarterly. They don't look at it. They don't make decisions based on what's going on, based on real numbers. And that only hurts you. Again, the wealthiest corporations, companies, they crunch all these numbers on a regular basis. They can pull it up off their computers. They use they're using much more advanced programs and budgetary programs, but they live on budgets, they live on numbers, and that's how they thrive. They know what's going on. They know what's impacting their business on a regular basis. So the very first step I would suggest for any business coming in is get informed. Know what's going on with your business. And part of that is getting your tax returns done, because your tax returns will tell you what's happened for the last few years, but also stay on top of it. Change your habits so that you're looking at your numbers on a regular basis. Now, once you're informed and you can see what's going on, then you have to look at, okay, how much profit am I making for my business? Can I provide for myself? And deal with the added expense of dealing with these tax issues that have built up. So there's a huge difference in how the IRS treats open and closed businesses. If your business is still open, still operating, then there's not a lot. I mean, you're really looking at a payment plan to pay this down, because they don't want to give you an unfair advantage compared to other business owners. If they give you a great deal, if they do an offer, sometimes you can do a hardship status and buy some time. But really what you need to be looking at long term, can your business pay these taxes and get straight with the IRS? If they can't afford to do so, then you have to take a serious look at maybe closing your business down. Maybe you go do something else. Maybe you start working a W-2 wage. There are plenty of people that are close to retirement age and like, okay, maybe I should just retire. You've got to find and do what works for you. So once you take that hard look and decide, look, I need to close my business. And this is just a summary of everything we've talked about last week. You need to file returns. And that's part of the process. So understanding, knowing what's going on. And that's not just with the IRS. It's with the state. You have to deal with the IRS and the state at the same time. So I'm going to go ahead and share the IRS article talking about closing down your business. There's a lot of good information here. This is where I've been pulling most of the information and kind of prompting myself going through this. So last week we really talked about canceling EIN, declaring bankruptcy, selling your business, and making sure these are all done right so that you don't get hurt. I've seen it happen way too many times. State government, closing out your state government case. And then we touched on SBA loans. If you have any SBA loans over $200,000 or PPP loans over $100,000, those need to be considered and dealt with. Because just because you close out your business, if you have those balances over $200,000 for EIDL loans, doesn't mean you'll be able to walk away from it. So know what your rights are, know what can be done in bankruptcy, and just understand that business bankruptcies are not cheap. Like I mentioned last week, I had someone call, wanted to talk, look at all his options. I said, okay, good. You should find and check out all of your options. You talk to a business bankruptcy attorney, quoted him $30,000. I said, well, call around, but $20,000 to $30,000 is not unheard of when closing out a business, because business bankruptcies are complicated. So if you can close out your business without filing for bankruptcy, that's ideal. But if you need to, you need to. And if you don't have the cash to close it out, this is why you need to make these decisions before you're completely out of cash. And I've had case recently where they purchased a business, they worked there, they knew the business, and they bought it from the owner because he was retiring, he was stepping away. And they didn't know how to run the business like the previous owner. They started wrapping up tax debt. And then when it crashed and burned hard, so much that there was really no funds left to wrap up the business. The business was closing. There was no argument about that. They knew they had to when they first came to me. They knew the business had to close out. They weren't caught up on their numbers, so they didn't have a good idea of what they were looking at. And then they didn't have the funds. The business didn't have the funds to get good numbers, to close out all the tax returns, and it became that much harder to close it out. And so the business owner actually had a benefactor, you could say, a friend that was helping her out and paid for most of the tax preparation to get done, and helped out with dealing with the IRS and paying the taxes that needed to be paid that would have followed her personally. So, and what taxes need to be paid so they don't follow someone personally when you close out the taxes? You need to look at state taxes first, payroll, and sales taxes. So sales taxes are usually state taxes. Any kind of sales, excise taxes, anything like that, they will follow you personally. You collected the money, it didn't go to the government or the state government, and they will be very aggressive about it. Payroll taxes is number 2. The reason why I say sales taxes first is that they will come after you for the full amount, and they are aggressive about it. Payroll taxes, they'll come after you for half the amount. And the IRS is usually much easier to work with. You have better options when working with the IRS than the federal government. So in this case that I'm focusing on, it, we're doing an offer and compromise. So we're taking all the tax debt, putting it in one basket. She's scraping by still. The business has been closed for a while now, and we're doing an offer and compromise now that everything's wrapped up, and just wiping it all out with the IRS now that the business is closed. So you have better options with the IRS. Take care of those state taxes. Now, are there some states where you can do an offer and compromise? Yes, and we've done them with various states. The best state to do that with is New York. So New York is very aggressive in some ways, but they do have, I would say, the best offer and compromise program among the states, if not the best, one of the best. The thing is, they don't want to close out any tax debt that's recent. So you want the tax debt to at least be 4 to 5 years. If it's closer to 10 years, even better. But we have done offers on New York sales tax, quite a few times. And so it's important to know who to pay off, which tax bills to pay off, which ones are going to hurt you the most personally. But in most cases, get those sales tax paid. Close out, you have to file all your returns to close it out. So, and make sure it has to be done right. So with the IRS, it says take care of your employees. It says pay the taxes you owe. And I got that just on Friday. Might have been Thursday. I forget which, but I was going to close out a business, had been closed out since 2017. So it's been closed out a while. There's no assets left in the business. And he said, well, they have to pay everything. I'm like, you don't know what you're talking about. All the returns have been filed. Everything's been closed out. I said, let me talk to your manager. And he hung up on me. So here's a key thing. This is something the IRS is not going to tell you. They're going to tell you have to pay all the taxes owed. But a lot of times you're closing out your business because you can't pay all the taxes. So there's a status called a defunct corporation. And anytime you have an EIN, sole prop, partnership, or corporation, if those tax debts are under an EIN, the IRS can only go after the taxes under that EIN, under the social. So if there's no bank accounts, there's no assets left under the EIN, they can't do anything. So that's why they close it out as a defunct status. And I'm in our break, so I'm going to take a break here. Welcome back, everybody. I'm going to do a quick review because I went over time. The biggest thing I was talking about here is the IRS is telling you have to go through these steps. Pay the tax you owe is one of them. So again, I was sharing that last week, I think it was Thursday or Friday, I called the IRS. Company had been closed out since 2017. No assets left in the company. We're just wrapping it up so the taxpayer can move on. Wants to make sure everything's cleared out. And one of the biggest things we're doing is taking care of it with the state, because the state will cause more problems long term than the IRS. Now, the reason for this is that everything was under the EIN of the business. All the tax debts are under the EIN. So if the IRS decides to levy bank accounts, and all the bank accounts are closed under the EIN, if they want to levy vendors, the business is closed, it's not doing business anymore. So the IRS has no tools to go after a business with no assets left. Now, word to the wise here, what you don't want to do and don't want to be seen doing is taking all the corporate assets and transferring it to yourself, so essentially looting the company, or you transfer it to another company. That is a huge no-no. If the IRS tracks that and comes across that, then they can pierce the corporate veil and follow the money. So, pardon me, it is something to be aware of. You want to make sure this is done right. But again, if there's no more filing requirements, all the returns have been filed, and closing returns have been filed, and closing returns can be just zero returns. In this case, the last return, you just fill out all zeros, mark it a final return, submit it, and that's how you close out filing requirements for 940s, 941s, 1120s, any kind of business return. Make sure your last return is marked as a final return. The IRS will not assume that you need to continue to file this, and then they will put this into a defunct status. Now, this gentleman I talked to last week didn't know what he was talking about and was claiming that they had to pay the tax in full. Not true. The IRS cannot pursue this, and legally they have no way to pursue this. So over the years, I've put hundreds of businesses in a defunct status where, again, they just sit there. And they do not become active again until someone starts using that EIN again. So if you use that same EIN again, there'll still be issues under that EIN, and then you'll have to deal with them. But that's why it makes sense to go open a different kind of business. So one of the things they will do, if you owe employment taxes, they will go through and assess the TFRP, or trust fund recovery penalty, to you as well. So that's why if you're going to pay something off, pay off the states, especially sales tax, then pay off any employer taxes, 940s, 941s. And if you can't pay the taxes you owe, then you go and you negotiate with the IRS and to get that taken care of. So report payments to contract workers. Anybody that does work for you over $600 is supposed to issue a 1099-C. But essentially, this is making sure all the paperwork is wrapped up, all your bookkeeping is done, and you can close it out. So then you can go in and cancel your EIN, or just close out your business account with a defunct status. So again, if you want to just close it out, here's the address to send it to. And again, we cannot close your business account out. That's bad information. Unless the IRS just changed their policies, which they've been changing so much. But again, it's essentially closed out when there's nothing happening. All the returns are closed out. And again, just ask for that to be put in the defunct status, and you should be fine. How long to keep your records? So this is something that can definitely burn people. You can still get audited with the closed business. Um, if there's really nothing left to the business, though, there's nothing for them to go after, so they normally don't do that. Um, keep your property records until you dispose of the property and the period of limitations expires on it. So that's really when you can amend your return, claim a refund, or the IRS can assess additional tax. It's usually 6 years. Keep employment records for at least 4 years. So that's when the IRS can go back and audit. I would keep it for at least 6 years. And then where do you keep those files? You need to keep them. Don't have them with the CPA. Don't have them with a bookkeeper. You should have a copy of this, a digital copy. CPA offices do close down. People get sick. They pass on. They move on. There's times people leave one company and go to another company. So while you should have access to all your records, I can't tell you how many times someone said, well, I went to my CPA and I can't get the records. So how should you keep those records? You should keep them in some kind of digital format. It can be on a thumb drive. It should be in the cloud. But again, if there's a fire, flood, or whatever at your home, maybe you have it at a safety deposit box somewhere as well, where if you need those records, you can access them and pull up all the information. So, and so this is some other articles for your information, but I just kind of want to, it talks about how to close a sole prop, how to close a partnership, how to close a corporation. It's all pretty much the same thing that we've talked about. Just make sure you go through these, do it right. The last thing you want is for the IRS to come knocking about a business that's supposedly closed 5-10 years ago. That happened. I've got some cases right now where someone had a business that wasn't closed out correctly, and they went to apply. It affects their credit. Whenever they apply for loans, they'll pull your information from the IRS, and some of the stuff is showing up. They can take refunds still if you don't close these businesses out correctly. So if you open a new business and you want to apply for a loan, make sure it's taken care of. Now, if you walk away from an SBA loan, you're probably not going to get another. If you owe PPP balances and you go for an SBA loan on a new case, you're probably not going to get another one. So make sure that, depending on what you're trying to do, what you want to do, understand how it can hurt you or help you to go in and resolve these tax issues. And the overall thought here is, and the IRS will come off in a ridiculous manner, but the overall financial principle, just remember this, is that we want businesses to be able to open, and on the flip side, we want businesses to be able to close. We want people to feel like they can take a risk, put some money out there. Entrepreneurship is what drives the middle class. It's what drives job creation. Large corporations are not hiring people on the numbers that we need. The real engine of economic growth is small business owners. And part of that is when things go wrong, we don't want to have this anchor and chain hanging around somebody's neck for the rest of their life. Famously, Abraham Lincoln filed for bankruptcy a few times, to when he had failed ventures. So again, there's kind of a boogeyman around bankruptcy. When you need it, it can be used. When you need to settle tax debt with the IRS, understand your options, and you can use what works best for you and your family. Now, one of the big things here is have a plan. Not only close your business out. And that's the thing. When we come on board, we've already done it so many times with the plan. It's like clockwork for us. We know what to do. We know how to do it. But one of the big issues here is find a plan to move forward. So in that case, I was talking before. Her plan was to go become a realtor. Now everybody knows what the real estate market is like today. It's horrible. Homes aren't selling. Interest rates are high. Taxes on homes are going up. Depending on where you live, they're going up a lot. And people are struggling to meet their bills. I saw a quick article where someone was losing their home in Florida of all places, with no income tax. But on the flip side, they can have much higher property taxes. Her property taxes went up by $1,700, and she had to walk away from her home because she couldn't afford it. How sad is that? So again, it's a tough market, but there are plenty of ways that you can go. So have a plan A, have a plan B, and having some savings, having some assets to be flexible with and be able to use in either opening a new business or helping you get licensed and go somewhere else or to survive on. Believe it or not, when people are surviving between jobs and using that money to pay your necessary bills, you can usually get that money either ignored in the short-term hardship to buy you time, or once that money is used up, the IRS understands that, look, people have to live on savings when they're unemployed, when they're down and out, until they find another job. So again, if you have questions regarding that, give us a call. Our phone number is 520-485-7371. Website again is guardiantaxlaw.com. And all these videos are being posted to our YouTube channel, so you can review this. And if you have questions, we have all the links up, so you can go directly to irs.gov, this one, small business, self-employed, closing a business. And so there's a lot of information here, and we're pretty open with it on how to help businesses. They even other links, coronavirus relief for businesses. A lot of these are kind of old, but again, getting what you need to help and wrap up your business. There's also webinars for small businesses, workshops, meetings, and seminars that are being put on throughout the country. And then they have e-news for businesses as well. So as much as I want to complain about the IRS, there is a lot of good information. I went to a charity last Friday. It was kind of funny. They had a piñata, and the person sponsoring the event was hitting the piñata, but she had a bad leg, and this thing was a beast. Didn't want to bust, and she was a CPA, and she said, well, and they announced, well, Laura hates the IRS. We're going to pretend this piñata is the IRS, and she said, no, I don't really hate the IRS. And I got it, but I jokingly said, oh, I hate the IRS. I'll beat the heck out of this piñata. And actually, they had a metal pole, and I bent it, hitting the piñata. That thing did not want to break, though. But I don't hate the IRS. I help people navigate and deal with it. What I hate is when they make it so much harder for individuals to work within the system. When they give bad information out, and I know better. So when I'm told something that's wrong, I can contest it. But when someone doesn't give good information, or they send you to a manager and disconnect without giving, if they don't know, too often they don't go get the answer. It's very frustrating. And unfortunately, professionals, they're so hard to deal with most of the time. How is that fair to taxpayers? So again, get informed, if anything, from that, and get educated how to run your business. Surround yourself with good tax preparers, CPAs. Have a connection to a good corporate attorney, and or when needed, a tax attorney. And again, if you don't have a burning tax issue, they're not coming in, knocking down your door. The best time to call us and get help is always well in advance. And people ask me that, when should I hire you? Well, ideally now, because we don't charge by the hour. The sooner you get us on the case, the more we can help you out. true story. I was in the medical office, ended up with $360,000 in debt. And they were all very nervous. You know, the information was kind of kept hush hush at first because it was a 6-way partnership, and these are very high end doctors, and it was very touchy, you know, very sensitive topic to bring up. And because we got on the case early, when the revenue officer got on the case and she asked for A, B, C, D, E, and F, or I'm going to garnish, levy accounts, I'm going to go after vendors, this and this and this. And so then we already had A, B, C, D, and E, F produced. I think there was G and H that we missed, but we already had most of it together. She changed her tune like that. Another similar case, this is more recently, someone passed away. The owner passed away that ran a business. And then you had some partners, and the partners were left in the dark, and they didn't know what was going on because they hadn't hired us. They weren't our clients. The owner's estate actually was the one that hired us. But once we were able to tell them, look, the revenue officer was assigned to the case, but as soon as he was assigned, we were already working on tax preparation. We already had the information he needed on A, B, C, D, and we got that information in. Both cases, kind of, people at the end, they go, well, why weren't we hurt? Was this too easy? I was like, no. We prevented all that pain by getting in early, and we were able to provide that peace of mind and have you prepared so you don't have to deal with all the nastiness that can happen. So call us if you have questions, and we will see you tomorrow.